In your 40s or 50s and still relying on a 30s style investment plan, it's time for a financial recheck. I'm Jayaprakash Kandasamy, Chief Growth Officer of AI Growth that powers the Jiraaf platform. You're likely earning more or even debt-free, but children's college education, parental care, your retirement might be just around the corner. With so much in the horizon, isn't it time for you to have some clarity and peace of mind with your investments or not anxiety? At Jiraaf, it's just not about investing. We strongly believe in supporting you with your time-bound goals with fixed, predictable investment products. Why this is a pivotal decade? When you are in your 40s or 50s, your financial needs that you were thinking about in your 30s are becoming more real and more time-bound. You're entering the stage where you need stability over speculation, income generation or not just capital growth, predictable outcomes that match key milestones. This is the time to align your investments with your life goals and choose predictability and security. That means moving from aggressive growth to balanced, reliable strategies. So start with the quick portfolio check. Ask yourself, are your investments aligned with key future expenses that is coming your way, whether it's college, weddings, retirement? Do I have enough liquidity and emergency backup? Is my portfolio too equity heavy or too risky for my life stage? Will I have predictable income for post-retirement? If you're unsure about even one of these, it's time for a portfolio check. So what is the right portfolio mix for this stage? It's not abandoning any risk, but because all investments do carry risk, it's about balancing it. 40s to 50s moderate risk portfolio might look like this. Say 40 to 50% in equity for long-term growth, 30 to 40% in fixed income like corporate bonds, 10 to 15% maybe in real estate and gold, and maybe 5 to 10% in liquid or emergency funds. Your 50s portfolio would look maybe a little bit larger in terms of allocation to fixed income, maybe 60% plus. It's a strategy that cushions you today and sustains you for tomorrow. Introducing corporate bonds, the missing piece. Still haven't considered corporate bonds? Well, you should. They offer fixed, predictable payouts, higher yields, all the way up to 15% on select high-yield bonds, capital protection on secured, high-rated bonds, zero volatility, and relatively carry lower risk than other asset classes, whether you talk about equity, equity-based mutual funds, gold, or even real estate. At Jiraaf, we offer curated investment-grade bond options from AAA all the way to BBB minus, and comes with a variety of returns and tenures that matches your risk appetite and goals. Well, annual portfolio check-ins do matter. Financial planning isn't a one-time task. Review your portfolio annually, rebalance when life or market conditions shift, keep enough liquidity, and optimize for taxes. The earlier you act, the more control you retain. So if you are in your 40s or 50s, now it is not too late. It's exactly the right time. Invest smart, invest safe, and explore fixed income products like corporate bonds and high-yield fixed deposit, all curated to match your life goals. Join Jiraaf. Let your money support the life you're building today and tomorrow.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.